today's live show, I'll be talking about self-assessment. And basically, every time we hear self-assessment, you're thinking, how does that concern me? I'm not a sole trader. However, self-assessment is definitely loads more than that. So, while I start, 1 second. So, in today's live show, I'll be talking about registration, requirement, compliance, reason why you should be self-assessment, where you should be under self-assessment or not. I'm not really sure about this lightning stones, like it's reflecting from outside. Anyway, my name is Ola Sulaiman. I'm a chartered accountant. I work with small businesses in Northampton, helping them to make sure that their business is run properly and advising them in their tax issues as well. So today I'll be talking about self-assessment, like I said earlier on. But before then, I usually start lunch by talking about what's happened during the week. And it's so funny because this morning I've been on my coaching class and we're talking about getting late to meetings or habits that you should not be doing. And I was like, okay. And there was different examples about bad habits, and like, okay, mine is definitely turning late to meetings. And usually I don't even plan to. Something will just happen. Something is either I miss my way, or I'm lost, or I miscalculate my time. So the plan this month is to make sure every meeting I turn there very, very early. However, I'd like to talk about swimming for the past 1 week. And I'm sorry if you watched this on LinkedIn yesterday. I still have to talk about it because it's like a major thing that happened to me this week. So I spoke to my swimming instructor, the teacher, about my challenge that I'm having at the end of this year. In November 3rd to be precise. And it's like an aquathon, which is 5K run and 400 meters. Before the 400 meters swimming, before then she didn't actually know what I was doing. And so when I told her, she was like, oh, don't worry, I'll help you. And she was so nice, and she had different plans for me on how to make sure that I be able to take on that challenge. And so yesterday when I went for my usual swimming practice, I was able to swim with a no-do because I have to be safe. The whole pool, 2-meter pool, which is very, very strange because 1 month ago I could not actually swim. Hi Chris, I didn't turn late on this. I know you're watching. Anyway, so today we're going to be talking about self-assessment. That's enough about me. Today we're going to be talking about self-assessment. Usually, like I said, when someone says self-assessment, the first thing that comes to your mind is, oh, this person is self-employed. However, it's definitely loads more than that. There are a lot of people that should be under self-assessment, but they're not aware they should be, or they're just turning a deaf eye, like, I can't be bothered to be under self-assessment. So I'm still moving things around because I think the Facebook lightning is very bad. Chris, can you see me very well? I know you're there. Wave if yes or no. I'm not sure if you can. I'm not sure if it's very, very clear. However, let me continue. So, what is self-assessment then? Self-assessment is a system that is set by the HMRC, the UK government, and this is a means which they use in collecting money from taxpayers in UK. So that's the system. Basically, when you in UK and you're working, most people, let's say 80% people, they get their income tax as source. However, there's still loads of people that actually don't get their income tax as source, and therefore, because of that, they are not paying tax when they should be paying tax. So this self-assessment system have been put in place to make sure that every one of us are paying tax and the system is fair. So today I'm just going to be explaining everything, not everything, I can never explain everything in 30 minutes, and I'm literally just conscious of the time as well. So if you're joining me for the very first time, I'll keep looking down into my book because I've written loads of things I would like to talk about, so pardon me if I'm looking. I don't want to miss anything as well, and 30 minutes is a long time to cram so much on the head as well. So like I said, you'd actually think is a system for a sole trader, which you're partly true but not exactly true. It's a system that is set by HMRC to collect money from people that have unpaid tax. I'll talk about that later. However, now I'm going to talk about different sets of people that should actually be under self-assessment, people that should actually be registered for self-assessment. And then at the end, you can then think about if you've actually fallen into one of these, if you need to register, if you need to do something, if you need to take an action, or the plan is at the end of the day, you are more aware about self-assessment issues, and then you more knowledgeable in it as well too. So the first set of people are the sole traders. Now, sole traders are people that have their own businesses, or they are just individuals that are trading through a profession or whatsoever. Now, if that person receives a trading profit of more than £1,000, now I've said trading profits, any amount that you've trading profit of more than 1,000, they really do not need to register. However, if they do, then they need to register. I don't know, I think they've given the benchmark just for people that just probably just once a year or twice a year have a trading income. However, most businesses definitely will have more than that, and they will definitely be on the self-assessment. I think the lightning for Instagram is not so good, but the Facebook one is alright. For Instagram, I don't know. Anyway, I'll just continue. Such people, it's possible for them to be employed while self-employed as well. And that's the question I've been asked several times. That is it possible for me to have my own business when I'm still employed by somebody else? Yes, it is possible. I'm still asking Chris, can you see me very well? Because I'm not sure about the lightning on the way you're watching. Chris, just wave or like or do something just to be sure that the lighting is fine on your side. Alright, I'll continue talking. Okay, so it's possible to be employed and self-employed. So as soon as you fall under that category, then you still need to register for self-assessment, because now you're doing both. A lot of people worry about doing it because they think they're going to be paying loads of more taxes. However, for sole trader, HMRC is not actually interested in how much you've received, although they want to know based on the information they need from you. They are interested in the profit from that business. Now, obviously, before you get to the profit part, you definitely need a turnover, so they want to know about that as well, how you got to that figure. However, it's the net amount, which is the turnover minus all your expenses. That is what they want to tax. That's what will be used to determine your national insurance you're paying, if you're paying or not, or the tax you're paying, if you're paying or not, or the percentage of your tax. So that's why they want you to be self-assessed, to be under self-assessment. So the second set of people are individuals that are directors of limited companies. Now, in the olden days, it used to be anybody that is a director of a limited company had to register for self-assessment. However, I think it was last year or 2 years ago, I can't remember now, I'm so bad with dates, there was a change that was made to it. And the reason why they made the change was there are some limited companies that are probably husband and wife, and the wife is not really active in the company, but still the directors, is still a director, and they still had to register for self-assessment because they were a director. So because of that, they changed the rule slightly. I don't know, I keep moving things around because I feel like you're not seeing me, but I think we're good. Alright, so because of that, they changed it that if you're receiving all your income through PAYE and you're still a director, and then you're not receiving dividends or whatsoever, you don't really need to register for self-assessment. Now, as much as they've said that, I've seen cases that HMRC still want them to register. So like I usually say on this live show, anything I say is a general advice. Your own case might be different. So if you want to be sure that you're doing the right thing, you need to get professional help, because you just think because they've said that now, that's the right thing. But still, I read on somewhere that they're still asking at times for you to be registered. I know it's a very confusing system. So the main purpose for asking directors to register is they want to know all your source of income. Yes, they do. They want to know where you're working, what you're associated with, whatsoever. And for most directors, most likely they will collect dividend from that company. In the olden days, they were not so firm about that because there was no dividend tax. But now that there's dividend tax, you can see my background. Now there's dividend tax, they're interested in directors that receive dividend, because if you receive more than 2,000 dividend in this tax year, you definitely pay tax on dividend tax. That's another talk for another day. So because of that, they are very, very interested in everything that is happening to directors. And I know it seems like it's an obvious thing. However, there's still loads of directors that are not registered for self-assessment. I don't know, it's either they're getting bad advice or they're doing it themselves. But at this stage, everybody that is a director, receiving dividends or receiving other income from the limited company or benefits, they should be registered through self-assessment, even though they are paid under PAYE. Now, the third set of people are people that receive income from land and property in UK. It does not matter if you're based in UK or not. As soon as you're receiving rental income, you should be declaring that through self-assessment. I know that sounds very obvious too. However, there are loads of people that still in 2019 not declaring their rental income to HMRC. And HMRC is even aware of this as well. So because of that, last year they started something that is called Let Campaign. And Let Campaign is you basically coming to HMRC and say, I've been receiving rental income for so amount of years. I'm coming to you now. It's a very, very long process, but at the end of the day, what the plan is for you going on forward to set record right. And I think the reason why they said that, I might be wrong, Let Campaign last year is because of the introduction of deduction of mortgage expenses. In the olden days, maybe you've received a rent of £1,000. Most likely your mortgage will be £650. So then you have £250, and then it's not a lot of tax. However, they started this new thing now that every year they're taking 25% off what you can actually claim as a mortgage expense. For this year, it's 50%. So the next 2 years, you can't deduct mortgage expense. So that's a lot of tax that HMRC knows they're going to be missing out. And so it's going to get worse. And that's all I can say. And it doesn't matter where you are based. As long as you're receiving the rental income, you should be registered for self-assessment. And I know you could say, oh, how would they find out about me? How many information do they know? Now, several years ago, 3-4 years, there was a new rule that all the agents have to pass your information to HMRC as soon as you're receiving the rental income. So they know about it. It's just a matter of time for them to come for you. And then somebody will say, oh, I'll just sell my rental income, my rental property before someone is come for me. All right, I'm just going to break your bubble. I've seen a case of a lady sold a house for more than 7 years. In fact, the house was even repossessed from her, so she wasn't making money like that. And HMRC came 7 years after saying, well, we know that you received rental income 7 years ago. Can you talk about it? We want to know your profit. We want you to pay tax on that. But luckily for her, she had a very good record system. And we were able to say there was no profit, there was no loss. However, so what I'm trying to say is they can still come for you after you've sold the house. So I think for most people that receive rental income, the best thing is to go ahead and say, I am doing this. Because when you do, you pay 10% penalty. But when they come for you and you're not cooperating with them, you pay 20%. And then when the property let campaign finishes, you pay 30% penalty. And the penalty will be based on the tax you should have paid. Imagine if I'm supposed to be paying 1,000 every year and I've received rental income for 14 years, that's 14,000. 30% of that is a lot of money. And it's very easy to be in that bracket. So if you're listening and you know somebody that is receiving rental income and not doing something about it, this is the time. Tell them, Ola said so. So the first set of people that receive capital gains either from selling properties or from shares or other assets. Definitely not cars. Thank God for that. And I think the reason why they've done cars is people sell cars all the time, and when you make loss on cars, you can then say, oh, when I made profits, you took some of it, now I've made loss. So it was a kind of blocking people from claiming too much. That's my school of thought anyway. So you don't pay capital gains on cars when you sell cars. However, every other asset. Now, I know it sounds like, oh, that's more tax. But just like personal allowance, that we have 12,500 this year, there's an allowance for personal, there's an annual exemption for capital gains as well. So most likely it might just be a declaration thing, because whatever gain you gain from the sale of that stuff, If it's not more than 11,700 this year, you don't have to pay tax on it. So let's say you sell a house at £100,000, and then you bought the house £80,000, and plus other costs, everything, and you fall on that. The profit from the sale is about 11,000. Then you still need to declare it, but you don't pay tax. But if it's more than 11,700, then you pay tax. So because of that, when people sell stuff, they want to know about it because they want a cut out of the profit you've made. Now, the fifth set of people are people that receive income abroad. If you receive income for more than £300 in a tax year, you need to register for self-assessment. Now, for people that are very good in knowing how to not pay tax, you think, will they know about that? Now, at times, what they do is, at that point, they might not know about it, but somehow later on, God forbid, you're due for investigation, and somebody's going through your bank statement, and they're seeing money coming through, and then you need to explain yourself then. That's number one. Number two, the way the system is now, they can actually get information from abroad, especially if it's a lot of tax that is involved. So if you're receiving income from abroad, more than £300, you should be registered for self-assessment as well. Now, the sixth set of people are people that receive more than 100,000 in a year. Now, the reason for those ones is because people that receive more than 100,000, as soon as they get 100,000, their adjusted net profit or adjusted net income is more than 100,000. Their personal allowance will start reducing for every £2, £1. So if they are not under self-assessment, they won't be able to know exactly what they're paying or not. Now, the seventh set of people, I'm checking the time now, are individuals that receive, couple. So it can either be your husband or your wife or your partner that receive more than 50,000 income in a year, and then you're paying and you're receiving child benefits. So as soon as one of you is receiving 50,000, not the total of your income, but as soon as one of you is receiving more than 50,000, you should be registered for self-assessment. Now, in the I keep saying olden days, 2 years ago is olden days, when they first introduced this new rule, what they did was they sent a letter to everybody that they knew were receiving 50,000, more than 50,000 income. However, 3 years down the line, a lot of people have had promotions or new jobs and they're earning more than 50,000, and then HMRC is not informing them. And because of this, then they are owing tax. And then 3 years after, then HMRC is coming for them. So when your income is more than 50,000, or your partners or your wife or your husband, you need to be registered for self-assessment, because what they want to do is to claw back out of that money they've given to you through child benefits, only if you're receiving child benefits. Now, another reason is set of people, if you're owing HMRC money, and usually when you're owing HMRC money, they will deduct the money from your tax code, and then you pay it over a period of time, especially if you make an arrangement with them. However, if you're owing this money from several years and you cannot actually allocate it to your tax code, and it's usually, when it's a lot of money, usually more than £2,000 or even less, then they put you under self-assessment. Because as soon as you're under self-assessment, you don't have a choice, you have to pay it. And when you're still under PAYE, they'll still be looking for you everywhere. But when you're under self-assessment, they know they can get the money. So that's another way. And then going on forward, you have to keep submitting self-assessment until when you say, I don't fall under self-assessment. Now, the ninth set of people are individuals that receive income from trusts, from settlements. Yeah. Now, the other set of people are people that are trying to claim relief for tax. So, for example, your charity gift aid, if you've got a lot that you need to claim back, you can register for self-assessment. It's an easy way for you to get in the money back. People that have expenses that is more than 2K, they can go through self-assessment as well. People that have personal pension, they're trying to get tax relief from their personal tax pension. I explained that last week. Yes, they can do that through self-assessment. Okay, wow, I don't know what I'm going to do in the next 10 minutes. I've still got loads. I'll keep going. Now, if you're now saying, if you follow in any of these categories, or I'm already making you to have a light bulb moment, the first advice I'll say is get help immediately. get help. No matter how long you've been doing the bad thing, as soon as you start doing the right thing, you sleep better at night. You stop worrying about it. So I'll say get help ASAP, because the longer you leave it, the worse it gets. The longer you leave it, the more your penalty or interest. Now, if you how do we register for self-assessment? You can do this by calling HMRC. The number to call is 0300 200 3300. You call them and say this is they'll ask you several questions just to ascertain that you're on the self-assessment. They'll ask you your personal details, and then you'll be registered. Now, the only disadvantage of this is it takes forever to get through the self-assessment HMRC, except if you call at night time. They close 8 o'clock every day. From I think it's 8 to 8, but I know it's 8 o'clock. So if you call in the evening like 6 to 8, you're in a safe place. But if you call during the day, just keep yourself busy, not waiting on the phone properly, and then to get your turn, you talk to them and you get registered. Another way to do it is filling the form online, download it and post it to HMRC. Another way of doing it is getting help, like I said earlier on. For example, my clients, I know it's not a lot of things to do registration, I just literally just do it. So for most professionals or accountants or tax advisors, they will do it for you. Get help. And even if you can't get help, probably you're doing it by yourself. Make sure while you're doing it, like I usually say, somebody's doing it with you. So in case you make any mistake, they can quickly correct you rather than you just doing it in hindsight. Another way of doing it, definitely the best way, the fastest way is doing it online. And to do that, the best thing I can say while I'm really out of time is to say Google register for self-assessment, follow the steps. Most likely, if you don't have a government gateway ID, you need to register for one. While you're registering for one, you need to identify yourself, so you need your passport or payslip or P60 or something to show that it's really who you say you are. So you need to register. Now, what would you need when you register? You need your personal details. Now, I know it sounds obvious, like obviously I know my name. However, if the name that HMRC knows you as is different from the name you call yourself, they won't register you. And trust me, it does happen. I've had 3 registrations rejected this year, and we didn't even know the reason why it was being rejected until the client said, oh, on my payslip, the name that is written down is so. And that's how we're able to do the registration, because the name they have for this client was different from the name that he thought it was bearing. So your name has to be exactly what you think HMRC knows you out. And how do you know that? The letters you get from HMRC, your payslips, etc. Oh my God, no pressure, 5 more minutes. Now, what happens when you don't register for self-assessment, when you should be registered for self-assessment? Now, before I go then, quickly, when do you have to register for self-assessment? I've seen people come to me and say, oh, I've started a new business, and I'll be like, yeah, fantastic, that's good. Oh, I need to register for self-assessment now. And they're worried like, oh, I started last month, I should have registered. I'm like, okay, pause, hold on. You don't have to register for self-assessment until 6 months after the end of the tax year. So in this tax year we are now, which is 1920, the tax year will end 5th of April next year. You don't need to register till 5th of October 2020. So I think the reason why they've done that is to give you enough time to think, to be sure that you're actually doing the right thing or not. But that does not stop you registering now. You can register. And if things change or your circumstances change and you're actually not trading, you can then call them again and say, in that tax year, I did not trade. I did not fall under any of the category to register. Now, what happened when you should be registered and you're not registered? I'm not going to rush this. I'll just keep going. And hopefully, somebody will not just get angry that I've gone over 12:30. It's better to slow down than rush. So when you don't register, when you should have registered, the punishment or the penalty is HMRC will give you a percentage. Now the percentage is based on your behavior. So like I said earlier on, if they've contacted you themselves, or when they contacted you, you cooperate, you were behaving yourself, or when you did, or did you conceal it on purpose because you didn't want to pay tax. However, that one they would have to prove it that you've done it on purpose, and they can actually, to be fair, but they would need to prove that you were actually trying to conceal that tax. That's why you didn't do that. So then let's say your tax that you should have paid is £1,000. What they do is the percentage they give you, which could go from 10% to 100%, you pay the same amount again. So using my example, £1,000. Let's say your tax you should have paid is £1,000. 10% of £1,000 is £100. So then you'll be paying HMRC back 1,100. I shouldn't be saying this. The good news about that is if you're not owing tax all those years, there's no potential loss for HMRC. And if that's the case, that means you shouldn't even be registered in the first place then, or not. So it depends on how you behave, and that's how they'll treat you. Now, when do you submit your returns? I know a lot of people say, oh, January is the time to submit your return. No, that's your deadline. When they say something is deadline, it means that's your last day to do it. However, the first day you can submit your returns, it's the 6th of April. The next day, let me reframe that. The next day immediately after the end of the tax year that you've traded in. So let's say in this tax year 1920, the tax year would finish 5th of April. That means you can submit your return from the 6th of April 2020. And I know you say, why am I worrying myself? Why am I doing this so quickly? Now, the reason that I give my clients is the earlier the better you submit. Number one, for the first reason, you have a rest of mind. Like, it's not a nagging feeling that, oh, I still need to pay tax. I don't know what my tax is. You stop worrying about that. That's out of it. So you have rest of mind. And probably you don't even need to worry about paying tax. Probably you don't even need to pay tax. But you spent all that time, 9 months, worrying about the tax you should be paying. So rest of mind, number one. Number two, as soon as the tax year finishes, you still have fresh information in your head. You still know why that person paid you £1,000 instead of £100. Rather than, I don't know, at least for me, I know the earlier the better. The information is still very fresh in my head. So because of that, it's very good to do it early enough. And the third reason is you know how much tax you're paying. You can then plan to pay that tax rather than leaving it till January, that is the deadline, immediately after Christmas, when you'll be spending money and then you're worried about paying. So that's my own advice. The earlier the better, and that's how I treat all my clients as well. I literally need to get you to do it so you know how much you're paying, and then you can pay monthly or pay whichever way you need to pay, and it's out of the way. So that's the reason why I'm of a school of thought that as soon as you can, get it done out of the way. And that goes for every other submission as well. The earlier the better. So the deadline is so let's talk about paying then. How do you pay? I usually say the best way to do it, I know that's my opinion, is to do it online. So you can pay with your card online. They would not accept personal credit card, so don't even think of doing that. They can accept corporate credit card, or you can use your personal account or your business account. But it's very, very, very easy, very straightforward. If you want to know how to go there, Google our best friend. Just type in or speak to your phone, like we were talking about this morning, and say pay HMRC self-assessment. It literally takes you there, and then you can pay the tax. Now, even if you don't have all the money at once, all he wants to know is how much you want to pay now. £50, £50, £50, and then you spread the money down. Now, the deadline for paying, there are 2 deadlines for paying. So the first one is the 31st of January, and then the second one is the 31st of July. What they do is, let's say you're owing £1,200 after your tax has been calculated. HMRC, based on the assumption that next year you're going to be doing the same thing, they'll add 50% of that tax to your 1,200. So that would increase it, and that will be your payment on account. So you need to pay that by July 31st before the end of the tax year, and it keeps rolling like that. So for people that are under self-assessment, they usually pay twice, 31st of January or by 31st of July. I know time is gone. I'm rounding up now. Now, however, there are some people that don't do that. If 80% of your income that you've received is from another source of income, has been taxed through PAYE, you will not pay on account. Or if the income you've had a year before is less than £1,000, you don't do payment on account either. Now, if you now think, oh God, I've done very well this year, I'm not going to do that much next year, you need to call HMRC and say, I understand what you're trying to do. However, I'm not going to earn this much. Now, they will change it for you. They won't even argue with you. However, if that's not the case, they will add interest to the money you're owing. So you need to be very careful with that as well. Oh, okay, I'm almost done now. Now, what happens if you're owing HMRC and you're not paying on time? Apart from the penalty, which hardly happens, you pay daily interest on that amount every year, every day. So there's a daily interest on the amount that is owing. Now, at the end of, and that's the end, that's the last end, I'm 2 minutes over. At the end of this live show, the main purpose is to create an awareness for you, obviously. I'm going to be uploading on the YouTube, so if you've missed any, and it's going to be on my Facebook, it's going to be on my Instagram, you can watch it. Because even if the information is not useful to you, you can't be too sure it's going to be useful for someone that you know. And like I usually say, the reason why I do this video all the time is most people will do the right thing if they know about it, and they don't know about it, that's why they're doing it. And that's not an excuse with HMRC. You can't say, oh, I didn't know I'm supposed to be doing, like somebody told me this week that I didn't know I'm supposed to be paying tax on rental income. That's not an excuse. You still get punished for not doing the right thing.